This video was actually filmed yesterday, but I am just now getting a chance to push it out because we had a very busy day full of children activities, and that's the reason I trade. So I do apologize for the delay, but this should get you set up nicely for this week. Happy Sunday and welcome to the Trading with Ashley show. We had such a wonderful event last night. So I just want to thank all of you that joined us and you've learned everything you need to know to grow your wealth with skips and leaps. And then Josh taught some incredible technical analysis that I know will help you in this week's trading. So what I wanted to do today was go through all of the economic events that will affect the way you trade this week. And of course, in true Sunday fashion, I will offer you a potential play that you can consider for this week. The last couple of plays have worked out really well for all of my viewers. But before I get into all of those details, I have to pause and take a moment to celebrate one of my members. His name is Frank, and he came to me a little bit over a year ago, and his goal was to learn how to properly trade to get his account up to $1 million. Now, I am happy to say that he has just reached that goal for a second time. So, what does that mean for a second time? Well, let me explain. Frank was starting with a little bit over $500,000 when we started a year ago. And I've met with him several times, and we have strategized on the best way for him to safely grow that account. And he has been an A-plus student, following my guide and following my lead and taking calculated risk, always protecting his capital. He got to his goal of $1 million in November, but when everything pulled back in April, it pulled back down to around that $700,000 mark. And that was very disheartening for him and, quite frankly, for all of us traders. But Frank did not lose faith. In fact, he turned to me and we came up with a plan for how he was going to recover all of that, then some. And I'm very happy to share that just a few months later, he is back at his goal of $1 million portfolio. And that's the thing when it comes to trading. And hopefully you're starting to figure this out. You can't just bail when the going gets tough. This won't work every single day, every single week, every single month. But if you learn the proper way to trade and you use risk management, you will preserve enough of your capital to outperform the market. Speaking of outperforming the market, let's take a look at our May results. Very excited for our sweet community. We have enjoyed a 15% return this month, and this is on 100% closed trades. So with that being said, let's see how that compares to the S&P and the Nasdaq because they have gone up as well. Well, as you can see, we outperform the S&P and Nasdaq, and the reason we have been able to do that is through selling options. And so if you ever wanted to be a part of all the fun and learn the proper way to make income like this, don't hesitate to join my community. We still have an incredible year in front of us with a lot of opportunities. In fact, I cannot wait to get going with my community tomorrow. Okay, let's go into the computer and I am going to go over everything you need to be looking for this week. Starting Monday, June the 2nd, we have the US ISM Manufacturing PMI. A higher than expected PMI indicating expansion could boost industrial and manufacturing stocks, demonstrating economic strength. A lower than expected reading may weigh heavy on some of our favorite stocks due to fears of an economic slowdown. Then on Tuesday, June the 3rd, we have the U.S. JOLTS job openings. Higher than expected job openings could signal a tight labor market, potentially pressuring stocks due to inflation concerns and expectations of sustained high interest rates. Lower openings might ease rate hike fears, but could signal economic weakness, impacting some of our favorite growth stocks that we love to trade options on. Wednesday, June the 4th, we have the U.S. ADP non-farm employment change. Strong job growth could lift consumer discretionary and financial stocks, but may pressure growth stocks if it fuels rate hike expectations. Weak data could broadly depress stocks due to economic slowdown concerns. And also we have the U.S. ISM Services PMI. A strong services PMI could lift consumer discretionary and service-oriented stocks, signaling robust economic activity. A weak reading may weigh on these sectors and broader indices. On Friday, June the 6th, we have U.S. non-farm payrolls, NFP, and unemployment rate. Strong NFP data, meaning higher than expected job growth, could lift stocks in sectors like retail and financials, but may pressure tech stocks if it raises rate hike fears. Weak data could broadly depress equities due to recession concerns. Now, how does this relate to trading? Well, the expected move this week for the NASDAQ is anywhere between 507 and 532. We have so much going on this week that could influence the NASDAQ's volatility, particularly due to the heavy tech exposure it has. Strong U.S. economic data could push the NASDAQ towards the upper end of the range, 532, by boosting tech stocks, while weak data or a hawkish ECB stance could pressure it towards the lower end at 507. Also, you have to consider the tariff-related uncertainties that will also amplify volatility. Now that you have all of that information, so how can you trade it? Well, here's one potential play that I'm looking at for you. We are going to be trading a put credit spread. Now, just a reminder, if you're trading a put credit spread, you do not need a lot of capital because you are going to be selling a put and buying a put. So you will just need enough capital between your two strike prices. Let me show you. Here's a potential play for you for the end of the week. I am going to use a limit order to potentially get into this trade. With so much volatility going on this week, there's a chance that it could get filled. So what I'm looking at is a put credit spread with the opening trade being 507 on June the 6th. I would sell to open one of those, and then on the other end of it, I would purchase the 502 put. I would do buy to open on that. On my net credit, I am going to put $1.25, and if you preview it, you can see that for this trade, I am risking $500 because that's the difference between 507 and 502, but for that, I am receiving $125. Now, the important thing is if you do a limit order, it's going to help you because if the NASDAQ spikes down, then this order will fill, but you want to be sure and use risk management. And as we get towards the end of the week, you may want to go ahead and close this out in profit to avoid any surprises at the end of the week. Remember, if you're with me, trading with Ashley, there is no trader left behind. Now, if you want more wonderful excitement on how to properly trade, I'm going to leave a very popular video for you so that you can keep the fun going. I'm going to leave that for you right here.